In this video, today we will talk about initial coin offerings, ICOs, and token sales. What you need to know. Initial coin offerings, ICOs, and token sales have revolutionized the way blockchain projects raise capital and engage with investors. These fundraising mechanisms leverage blockchain technology to issue digital tokens, enabling projects to access global capital markets and democratize investment opportunities. This comprehensive guide delves into the intricacies of ICOs and token sales, exploring their evolution, mechanics, benefits, risks, regulatory considerations, and future prospects. Understanding ICOs and token sales. 1. What is an ICO? An initial coin offering, ICO, is a fundraising method used by blockchain projects to raise capital by issuing digital tokens to investors. In an ICO, investors purchase tokens using cryptocurrencies such as Bitcoin or Ethereum, and the proceeds are used to fund project development, infrastructure, or operations. ICOs typically involve the creation and distribution of a new cryptocurrency or token, which represents a stake or utility in the project or platform. 2. What are token sales? Token sales, also known as token generation events, TGEs, or initial token offerings, ITOs, encompass a broader spectrum of fundraising activities involving the sale of digital tokens. While ICOs are a subset of token sales may include offerings of utility tokens, security tokens, or other types of digital assets. Token sales enable projects to raise funds for various purposes, including project development, platform expansion, and community engagement. Evolution of ICOs and token sales. The concept of ICOs and token sales emerged in the early days of blockchain technology, with projects seeking alternative methods to traditional venture capital funding. Bitcoin's creation in 2009 paved the way for the development of new cryptocurrencies and blockchain platforms, leading to a proliferation of innovative projects and decentralized applications. dApps. In 2013, Mastercoin conducted the first ICO, raising over $500,000 worth of Bitcoin to fund the development of a new cryptocurrency protocol. Since then, ICOs and token sales have gained traction as popular fundraising mechanisms, with thousands of projects raising billions of dollars through token offerings. Benefits of ICOs and token sales. 1. Access to capital. ICOs and token sales provide blockchain projects with access to a global pool of investors, enabling them to raise capital quickly and efficiently. By issuing digital tokens, projects can attract funding from cryptocurrency enthusiasts, investors, and early adopters without the need for traditional venture capital or institutional investors. 2. Decentralization and democratization. ICOs and token sales democratize access to investment opportunities by allowing anyone with an internet connection and cryptocurrency to participate. This decentralization enables projects to raise funds directly from their communities and supporters, bypassing traditional gatekeepers and intermediaries. 3. Incentivizing network participation. Token sales often involve the distribution of utility tokens, which grant holders access to a project's platform, products, or services. By incentivizing network participation through token ownership, projects can build vibrant ecosystems and communities around their platforms, driving adoption and usage. 4. Facilitating innovation. ICOs and token sales foster innovation by enabling entrepreneurs and developers to fund new projects, experiment with new business models, and explore emerging technologies. The availability of capital through token offerings encourages experimentation and entrepreneurship in the blockchain industry, leading to the development of innovative solutions and decentralized applications. Risks of ICOs and token sales. 1. Regulatory uncertainty. ICOs and token sales operate in a largely unregulated space, raising concerns about investor protection, securities laws, and regulatory compliance. Regulatory authorities worldwide are increasingly scrutinizing token sales and imposing regulations to protect investors and maintain market integrity. Projects must navigate complex legal frameworks and regulatory requirements to ensure compliance with applicable laws and regulations. 2. Scams and fraud. The lack of regulatory oversight in the ICO and token sale market has made it susceptible to scams, fraudulent schemes, and Ponzi schemes. Malicious actors may create fake projects, issue worthless tokens, or misappropriate funds raised through token sales. Investors must conduct thorough due diligence and research before participating in token sales to mitigate the risk of scams and fraud. 3. Market volatility. The cryptocurrency market is known for its volatility, and token prices can fluctuate significantly following ICOs and token sales. Investors may experience rapid price swings, liquidity issues, or market manipulation, leading to potential losses or reduced liquidity. Projects must manage investor expectations and communicate transparently to address concerns about market volatility and price stability. 4. Lack of investor protection. Investors participating in ICOs and token sales may lack adequate protections and recourse in the event of project failure, fraud, or misconduct. Unlike traditional securities offerings, which are subject to stringent investor protection regulations, token sales often involve fewer investor protections and disclosure requirements, exposing investors to higher levels of risk. Regulatory considerations. 1. Securities laws. ICOs and token sales may be subject to securities laws and regulations, depending on the nature of the tokens and the jurisdiction in which the offering takes place. Security tokens, which represent ownership in an asset or investment contract, are subject to strict securities laws and regulations, including registration, disclosure, and investor accreditation requirements. 2. Taxation. Income generated from ICOs and token sales may be subject to taxation, including capital gains tax, income tax, or value-added tax, VAT, depending on the jurisdiction and the classification of tokens. Projects and investors must consult with tax advisors or legal experts to understand their tax obligations and ensure compliance with applicable tax laws and regulations. Initial coin offerings, ICOs, and token sales have reshaped the fundraising landscape in the blockchain industry, offering innovative mechanisms for raising capital and engaging with investors. While these fundraising methods present exciting opportunities for innovation and investment, they also come with inherent risks, regulatory challenges, and complexities. Projects, investors, and regulatory authorities must collaborate to address these challenges, promote transparency, and protect investors while fostering innovation and growth in the blockchain industry. By navigating regulatory frameworks, implementing best practices, and fostering trust and transparency, ICOs and token sales can continue to drive blockchain adoption, fuel innovation, and democratize access to investment opportunities worldwide. What do you think of our video? Let me know in the comments section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.